Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Joe Tigay, portfolio manager with Equity Armor Investments. Joe, it's great to see you as always. Welcome back to Trade Talks.
It's good to be here.
And Joe, you sent your notes over to me and you're telling me VOLQ and VIX, they have not seen that capitulation point. Explain to us what that means and what does that mean for the market?
Yeah, so for me as a vol trader, oftentimes I look at how volatility is reacting as a contrarian indicator. If everybody's rushing out there and buying options, buying puts, really expecting the market to go lower, that VOLQ is going to explode. It's going to go higher. When it reaches that panic buying 50 level, when it reaches about 40, that tells to me that, oh my gosh, people are really worried about the downside. And kind of as a contrarian trader, which I like to be, that tells me maybe the downside's closer than those people think. On the reverse side, people are out there selling volatility. If it's all the way down in the low 20s, that's the reverse side. People are saying, hey, I think this market's going up, 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 up. And when too many people get on that side of the trade, I want to go in the other way and say it's going lower. Right now, those indexes, they're in the middle of the range. There's it can go either way from here. We can have a rally, we can have a sell-off. And volatility being in the middle, kind of an elevated middle of the range, there's expected to be a move in either direction.
And it's not just happening here in the U.S. markets. This ripple effect is starting to be felt around the world. I thought it was really indicative of what happened with foreign currency markets this week with the intervention with the yen. I mean, that's not just the equity market. That impacts virtually every asset class.
Yeah, so and it's really all about the dollar strength. It's really difficult to have this dollar strength going around the world. All these currencies are struggling. The yen was just going out of control. Their central bank or the government finally stepping in. We'll see if that lasts. But yes, we had the move yesterday that caused the dollar to rise. Of course, interest rates rising, and that caused these next waves of volatility. Of course, you're talking about Japan, but that's going to ripple around the region in Asia and eventually come back here. So volatility in one asset class has its way of finding its way to other asset classes. It kind of moves around, and then ultimately, sometimes it's fine, but sometimes it trips up and it uncovers something you didn't expect to see. And that's where you see some credit risk or some market risk. That's kind of a contagion effect.
Right. And by the way, we have midterm elections coming up. And as you had noted, the last 10 days of September are typically the ugliest days in an ugly month.
Yeah, so midterms are usually a rough year. The bad news is that September is the worst month of that rough year. The bad news is that the last 10 days of September are the worst of that month. The good news, however, is once we get out of that, in typical midterm years, we do see a rally through the end of the year. So if it holds pattern, we're in for a little bit of more trouble the rest of this month, but then hopefully we can get a little bounce.
So we get through September, we get through October, and finally we'll have some corporate earnings to digest and not just be in this vacuum with only macro headlines. We get through midterm elections, right? Then we get into seasonally positive years and a lot of positive months. And, a lot of this uncertainty is kind of removed. So could we potentially, see a better November or back half of November and December?
So it's certainly possible. Now, it all depends on how is the economy doing. I think that sounds obvious. There's a lot of people forecasting there's going to be a recession. We had a big downgrade in Europe yesterday. Is that going to be the case in the U.S. also? So yes, how is the economy holding up? We know, these higher interest rates, they do stifle the economy. Typically, though, it takes some time for it to all filter out. We'll see how at the end of the month how the housing sales have done. If housing prices are holding up, we'll see. And usually, that's kind of the first domino, and then you start to see things slowly start to filter through. So maybe earnings will be fine this quarter, but the guidance for 23 and beyond, that's where we might see some pain.
Yeah, you don't want to hear any more FedEx updates, certainly not like that. Joe, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.